You've heard of whole life, you've heard of IUL, you've heard of term, but have you heard of survivorship? In this video, I'm going to break down survivorship life insurance. So survivorship life insurance is interesting. It's also called second to die. Now, second to die life insurance was really, really popular, and then it kind of fizzled out for a little while. It seemed like when interest rates went low, a lot of companies pulled their products, and now it's back in a big way. Now, survivorship life insurance basically means that they're insuring two lives. And when they insure two lives, mortality costs go down, which means the cost of insuring those two people, because now they're insuring two lives. The death benefit is not paid out until both people pass away. So if you have a husband and wife, or you have spouses and one passes away, the other spouse still has to pay that same premium, and none of the money gets paid out until the second spouse passes away. Now you go, well, what's the purpose of that? I thought the whole purpose of life insurance was to pay out when one person dies, so that money goes to replace the income. That's a really key purpose for life insurance, and that's a very common purpose. That's where you're going to see term insurance used a lot. But survivorship is really going to be about legacy. This is going to be the money that you leave behind. And so survivorship life insurance plays a really interesting role in a few different retirement scenarios, because it can replace a lot of money in comparison to if you were to buy a policy on one of those lives. You can get better leverage. In fact, you would be shocked at how many 70-year-olds and people in their mid-70s buy survivorship life insurance and can actually replace a lot of money. So where this becomes really advantageous is, let's say you have somebody in retirement who has a need to spend through a lot of their principal, but they want to make sure they're leaving something behind. Or they wanted to tap into the equity of an asset, and they want to make sure that there's money behind for the surviving people to be able to repurchase that asset. This is where survivorship life insurance can play a really great role for that type of scenario. I'm not saying that's where you should use it. I'm just saying that's where it can be used. It also can just be a place where you can say, okay, how can we get the most amount of death benefit to leave to the kids for the least amount of money, and have it be set for a certain age. Now, survivorship policies can be done with whole life. They can be done with IUL. They can be done with GUL. If you're not familiar with those, take a minute to stop and watch this video I did on different types of life insurance over here. That'll really help clear that up. I'm not going to go into all that on this video because that's a whole other video. But you can structure it with whole life, IUL, and GUL. Now, there's even some people who have said, okay, the death benefit is amazing, but because the lower mortality costs, what if we actually structured a cash value inside this policy? Because theoretically, with a lower mortality cost, maybe that'd be less to be charging the cash value. I've seen some really cool designs doing that. I personally don't do a lot of that work, but it can be actually a really cool idea. I've really seen it commonly done with whole life, where you can actually set up survivorship life insurance and have a really cool, sophisticated whole life design where you're preserving more cash value in the policy than just saying, okay, there's really no cash value and we want the most death benefit we can for the least amount of cash we can put in. That would be kind of the opposite. But if you wanted to structure it, again, the opposite way, we have less death benefit to try to structure cash value, those designs are out there. I'm not going to go into that in this video. What I am going to talk about is the SGUL, the Survivorship Guaranteed Universal Life. I did a whole video on Guaranteed Universal Life a few years ago, but this is kind of unique because an SGUL is really something that can be amazing for the right family, because you can pick an age that you want to guarantee the life insurance to. It can be 95, 100, 105, 120, depends on the company you pick, but you get to choose the guarantee age. So basically what that means is you say, okay, I want a policy where if I pay this amount of premium, doesn't have to perform, the company is going to guarantee it to a certain age. So a lot of people will pick 105. That's a very common age because like 99% of people won't live to 105. Some people will, and then you have to put in more money. It would be significantly more expensive if you had to do that because the premiums would jump through the roof. So you really want to pick a guarantee age that you feel comfortable with. Again, one of the tricky parts about life insurance is I never want to be involved in setting up plans where people feel like they have to die by a certain age. That's not really a design that I like being a part of or want to be a part of, because I want people to feel like they can live and really enjoy their life and not feel pressured to die at a certain time to collect a benefit. That's not the meaning of life to me. I want people to feel really good about their life insurance. So I let the clients be very active in participating and picking that guarantee age for their comfort level and their needs based on what they know about their family history and their health and what the company decides their health rating is. That's how they really come to that age of the guarantee age for them that the company will support. So we run a pretty long guarantee age if we're going to do an SGUL, because we want to make sure that we have that room on the back end in case somebody really surprises you and lives a lot longer. And so when you set that up, you can create amazing leverage for people that never thought they could have done that. I mean, it's amazing to be a part of what they can do for their family, their kids, their grandkids, their community, their church, really close charitable intentions they have to their hearts, and be able to make sure that they're maximizing their legacy for the next generation. So survivorship life insurance is unique. And now that interest rates are much higher, it's become really a great time to revisit it. I don't endorse any specific products or companies on this channel at all, but just the type of life insurance is important to learn about. I feel like there's not a lot of people talking about it on YouTube, and so I thought it'd be a cool opportunity to share with you. Again, if you want more information about different types of life insurance, check out this video here where I break down different types and where you can use them in different scenarios.